So how's everybody doing? My name is David W. Williams, the founder of the highest paid part-time job in the world option trading academy, and wanted to bring this special broadcast out to you. This broadcast is recorded, even though you're currently seeing it live. And I want to bring somebody that is really, really important to my trading journey to really help me understand how to be a better trader, understand and give me a lot of perspective on the market. She's in my VIP program because of the amount of value I knew she could bring to my students. Is Lance. And what Lance really specializes in is how to navigate price action. And as a result of her teaching you how to navigate price action a lot better, you're going to be a lot better at your entries and your exits. That's something that a lot of people have a challenge trying to figure out when to come in and when to come out. You're going to be able to time your entries and exits a lot better to make you a much more efficient and profitable trader. And you're going to get a lot of better risk and reward. And all of those things coming together is going to put you in a potential to make a lot more money. So what we're going to do is we're going to throw some tickers at Lance, and she's going to really show you how she's been able to build up a skill set to allow her to become a very, very successful trader that you want to be. So I want to tell you to really tap in, listen to what she's telling you, and take what she's telling you and also implement it. And also later on, follow up with her because she can give you a lot more in-depth to what she's teaching on this particular broadcast so you can start to develop yourself so you can become the trader that you want to be. Lance, how you doing today on this Thursday?
Pretty good, David. Happy to be here talking with you again. I always enjoy sitting down and chopping it up with you.
I appreciate you coming through. So how did you want to start this off? Is there any, so let me ask you a question real quick. So I want to kind of get some context because I've known you through social media for a while. And one of the things I really appreciate that you did for me back in the day is that you did business with me online and you didn't even know me from Adam. And so I don't forget stuff like that. I always remember that you essentially showed your confidence in me. You spent money with me and you didn't know me from the the guy down the street. So right. I really appreciate you doing that. You showing that confidence in me. And I always want to, follow back with you because I know you're very excellent at what you do. You've been very consistent. One thing I've known that you've done is talked about the same thing for a very long period of time. Right. That's something I look for. So I want to ask you from a technical analysis or a price action standpoint, how long have you been in this particular space developing your skill set?
Oh man. So I started as far as my journey in the markets, it started probably about a decade ago, but I really, really started digging in deep on price action around 2017. What I was finding was in my swing trades, I would jump into something. And, back then I was, how you are when you're a newbie, no fear, you're going to risk it all. So I was finding myself jumping into stuff and then finding myself being down like 70%. And then luckily I would give it enough time so it would recover and I would end up profitable. But that just wasn't enough for me. I was like, well, what if I could be down, maybe 30% or no more than 20, or maybe even get in as it's going up and not even have to worry about that drawdown. And so that's when I really started to look at charts, and it just grew into an obsession quickly. And so pretty much all of my free time for 2017, 2018 and on was spent on looking at charts. And I would just literally spend hours at a computer looking at charts, trying to see what I could learn, looking for patterns, learning about indicators and seeing which indicators best work for me, and things like that. So yes, it's been 4 years. It feels like longer than that, to be honest with you, but yeah, it's since 2017.
Okay, I feel you. And so in looking at charts, what are some of the mistakes that you think that a novice trader, encounters in looking at charts that kind of doesn't allow them to get the success that they desire?
Too many indicators.
Okay.
And that was something that I almost, fell into when I first started. Because when you go on Twitter and you follow these traders and they have these crazy looking charts, and you're just like, oh, well, let me see what that is. Let me see what this is about. And so I ended up with just a few indicators, with the goal, even from that point when I first started, was to be able to read a naked chart. Okay. Just to be able to look at the candles and be like, all right, this is what I think is going to happen, or whatever. And so that's pretty much where I'm getting to now, is not even needing indicators. And it's okay to use indicators because indicators are based off of their mathematical formulas of that price action, so of the candlesticks. But you don't want to get caught up in the indicators themselves. For example, someone might see that, maybe the MACD is bearish, and so they're thinking, oh, let me just grab some puts, and the price ends up going the other way on them, and they're just like, you're just bewildered and confused. So another thing is you can get conflicting signals with multiple indicators, and so that can cause analysis paralysis, or you just abandon the play altogether. It really can cause a lot of confusion if you're using too many indicators. And that's what I see a lot of people starting out. They start off with tons and tons of indicators, but you really only need a few, especially if you're just starting out. You don't need a lot of those.
Okay. And so when a person is trying to kind of learn how to navigate price action, do you think that they need, because something that I try to get people to understand is kind of understanding how the overall market profile works. But do you think it's possible, and I've seen some guys do this, to just purely look at a chart without kind of understanding the overall market profile and become a successful trader?
Absolutely. A lot of the people, especially with Forex, a lot of people that trade Forex, they don't have any concept of the fundamental side of it, like what's driving that price action. You can definitely be successful with it, but I think it's good to have a good mix of both. And I could be a little hypocritical because I'm mostly price action. I do look at the news, but it's not. I let the price action influence me, not the news. Okay. Basically, when I see something in the charts, I watch the news to confirm or deny what I'm seeing in the charts. So basically, whenever the news comes that confirms what I'm seeing in the charts, then I know, hey, that's my signal to go. You know what I'm saying? Like the charts will show, it'll foreshadow a catalyst before that catalyst hits the wires, and everybody knows about it. Because we know that somebody knows before the greater public knows. And so you'll see that in the charts if you look closely enough. And then for me, it kind of puts that reminder in my head to, hey, be looking out on the news for some sort of catalyst to change this sentiment that you're seeing on the charts. And then you'll know it's time to make a move. But I think in order to be a more well-rounded trader, it's good to know what is driving the price action, to know, what is coming down the pipe for whether it be, global politics or whatever, or just something that's specific to just one company. Just know what may be coming down the pipe that could influence the price action.
Okay. And so when you kind of come into this trading space, you're kind of bombed with all these different ways to become a successful trader. What about you and your personality, your psychology, made you decide that, you know what, I want to go into this particular lane and specialize in this lane because I believe that's going to put me in the best position to get the results that I desire?
Well, I've always liked science, and price action to me is sort of like a science experiment where I can sit down and develop a hypothesis about, what I think is going to happen, and go to the chart and test that hypothesis to see if, is this confirming my hypothesis, or do I need to step back and reconfigure my hypothesis or develop an entirely new hypothesis. And I enjoy the challenge of learning charts. So when I first started learning charts, people that were mentoring me at the time, they, were advising against that. But, for me, like I said before, I don't want to just be profitable. I want to be efficient. I want to get in at the opportune time. I don't want to get in too soon and lose a lot of my capital because it messes with my psychology. That's just a part of me knowing myself. If I jump into something and I see, and I didn't get in at the right time, and it ends up going against me like 50%, I'm likely going to cut my losses before I even get to that point. And then it ends up turning and going the other way. And that's just a clear signal that, hey, my entry was trash. You know, my analysis was pretty good overall. You know, it did what I wanted it to do, but there was some sort of breakdown in my psychology where I was just too impatient and got in before the signal really was triggered. And that just caused me to just mess up the whole play. Now, some people, they can do that, you know, but for me, with my being having a scientific background, um, I just gotta be more efficient with my plays, and I don't necessarily like to have my money tied up for a long time. So if I'm looking at a play, you know, over the course of a month, but only 2 of those weeks are bullish, then I want to look to try to get it at the bottom. Not that I'm gonna always get it right at the bottom, and that's okay. But if the price is at 100, and you know, maybe at the beginning of the month it's at 100, and I'm thinking, you know, maybe it's gonna go to, you know, maybe 120. I don't want to get in at 100. I want to get in if it dips down to, you know, 90, 80, you know, something like that. That way I have more profit potential. But in getting in something at 100 and then it drops to 80 and then you got to ride it back past 100 just to be profitable, it just doesn't make sense to me.
Okay.
It doesn't make sense to me.
Okay, I understand that. And so one of the things I want to talk to you is that, and I'm not saying that you do this, but one of my challenges as a trying to understand technical analysis of price action really, is that a lot of times when I'm reading curriculum about it, it's a lot of diagrams.
Yeah.
So it's almost, you know, this diagram means this or this diagram means that. And that's difficult for me because all I see is buying and selling. I don't see diagrams on the chart. So it's hard for me to recognize that this diagram means that this particular action is going to be a result of the diagram. I was looking at Head and Shoulders last night. I still don't understand how to see it. I just can't. I haven't looked at it long enough. But when they identified it, even when they show you on the chart what a Head and Shoulders is, I don't see it. I can see cup and handle a little bit. Yeah. So the question I want to ask is that, how does a person navigate? Because a lot of the training in this particular area is about diagram recognition.
Yeah.
As opposed to me, what I do is I just look at buying and selling based on the situation. So is there a way in which you can navigate it to where if you don't really understand diagrams, you can still be successful? Or do you just got to try to figure out, if I just look at enough charts, I can recognize the diagram?
Yeah, so you're right on both sides of it.
Okay.
The way that I learned was just looking at charts.
Okay.
Just spending hours and hours and hours and being like, okay, I'm gonna sit down here, and for this session, I'm gonna focus on trying to learn to identify a cup and handle. So I'm just bringing up all kinds of charts, trying to see if I see a cup and handle, and I would rinse and repeat for each pattern. And eventually I got to the point where I was like, oh, I can see that, you know, and then you can see it without even drawing. You just look at it, oh, that's cup and handle right there. And then on the other side of it, you can definitely be successful without any of that stuff. However, going back to being more efficient with your entries and exits, being able to recognize those diagrams, they give you context. So if I see, you know, a cup and handle and it's coming up toward the rim, then I know, okay, there's a possibility that it's going to pull back a little bit, and that's probably where I want to make my entry. Instead of getting in at resistance and then it dropping on me and then me potentially losing confidence in the play, and selling before it, you know, takes off and really takes off. And the thing about those diagrams is they give you targets. So when I see a cup and handle, I know exactly where I'm selling. I know exactly where I'm buying. When I see a head and shoulders pattern, I know exactly where I'm entering. I know exactly where I'm exiting. And just a plethora of the other patterns is the same thing. And they also give you context, overall context. Like, for example, with SPX, if you look at like the monthly chart or the weekly chart of SPX, you'll see what's called a rising wedge. So, you know, with the rising wedge, it starts off wide at the bottom. So you got more volatility. And as it continues upward, the volatility gets lower. And the pattern is by default, it's bearish, but not always. So the thing about a rising wedge is when you get a breakout, it's usually a very strong breakout. And then when you get a breakdown, sometimes it could be a bear trap, and then sometimes you can get a complete breakdown. So far for SPX, it's just been bear traps with that rising wedge pattern. So over the course of the past year plus with my trading SPX, I know in the back of my mind that, hey, we got this rising wedge forming. At some point, we might get a breakdown, and I'm looking at, economic news coming in, political stuff happening, earnings. And so I'm like, okay, we know that this bullishness isn't sustainable like it has been, like how strong this bullishness has been. It's got to pull back at some point. So in recognizing, okay, this is the support, this is the lower trend line of that rising wedge pattern. Once it breaches that, I know it's go time for some puts. But I have my levels to the downside drawn as well. I'm not with the fact that, like right now or recently when SPX pulled back 5%, I had that level drawn on my chart. SPX pulled back 5% and it's been up from there. So that was just a bear trap. But in being able to recognize that pattern, I was anticipating it well before it happened. So that's an advantage of being able to identify those patterns, because it gives you insight into what the market is feeling. So
okay, that makes sense. Okay, so we kind of broke down and got a kind of like a comprehensive understanding of your perspective on price action, technical analysis. You ready to start looking at some charts?
Yep.
Okay, let's go ahead and get into it.
So which one you want to look at first?
Let's try YY if you want to.
Okay.
Yeah, let's try YY. And just if you have an issue sharing your screen, just let me know.
Okay. Look like it's so far so good.
Okay, we're good to go.
You can see my screen?
Yes, ma'am. So this is what I want to talk to you about this, because I've gotten information that this company is engaged in fraud. So I'm bearish on this company.
Why?
Yes, ma'am.
Okay, cool.
So I anticipated that it would be at a lower price than what it currently is now. It rose up out of a dump.
Mm-hmm.
But I'm looking for how they're going to report earnings, but I've gotten a lot of information that this particular company isn't engaged in fraud. So that is purely speculation on my part. It's also not investment advice.
Okay.
So that's why I wanted you to look at this, because I'm not understanding when I'm looking at a lot of these Chinese companies. I don't even understand what they're trading on.
Mm-hmm.
But somebody's buying and selling it, whether it's algorithms or real people. But I saw the same thing with GSX. It traded real wonky, and then it just collapsed one day.
Right.
Yes, ma'am.
Okay. All right. So anytime I'm looking at a chart, even if it's a chart that I've looked at before, and this is one that I don't even think I've ever heard of it before. I do a top-down analysis. So I start with the highest time frame, and then I work my way down. And I think it's important that, all of us, whether you're seasoned or just beginning your price action journey, it's important to get into the habit of looking at all the different time frames. And then from there, being able to put the pieces together. Because sometimes you may see, okay, on the higher time frames, we got bullishness, but on these lower time frames, we got bearishness. And it's easy to get confused about that. But always think about the fact that they're different. There's a different frame of reference in terms of the time frames that you're looking at. So this one right here is a yearly chart. So each candle represents 1 year.
Okay.
Yeah, that's right. 1 year. So of course we know we're not going to see a whole lot of action on these because you only get 1 candle a year. But already I'm seeing this $80 level as being key. As you can see, it spent the majority of its time below $80. So 80 is a very important level. I usually pretty much always mark the previous year's closing price, especially if it was bullish. And as you can see, it's it opened at that last year's close, pushed up, and then quickly came back down below it, and is headed toward last year's open actually. So that's a level I would be looking at, you know, comparing those 2020 levels here on this yearly chart. Also here, this is, for me, this is something like this is resistance, but it also kind of represents what the sentiment is on this time frame. So this is called, this right here is like a symmetrical triangle. It's typically a neutral pattern, but what I'm saying is that no later than next year, there may be some sentiment change on this one. But I mean, here we are. We're toward the end of this year, but be looking for these areas. So about 55 and upwards of that 80, that low 80s area as far as this year is concerned. Those are definitely two levels that I would be looking at. All right. So then I move down to the monthly chart, and I can get a better sense for what's going on. Let's see. Adjust my little trend line here. Okay, so this lower trend line of this symmetrical triangle is holding that support right now.
Okay.
Also, just to eliminate as much confusion as possible, because my charts can quickly get messy. This right here. So we got some change in sentiment here when this trend line was broken. When was this? Back in August.
Yeah.
So this is a thing that can help people with determining entries and exits. So if I were looking at this and, you know, thinking of a bullish move, for example, in observing it during this fall, I would of course be waiting to see a good strong close over this trend line. And you won't always see a bullish move once this trend line is broken. Sometimes it'll consolidate out of there, but it looks like it's moved into a consolidation phase of the market cycle. And it does not mean that the price is going to move up from here. So for me, if I were looking for puts, I would want to see it break down below this trend line here. So what else can I see on this time frame? Obviously, this 120 to 130 area is key too, as it kind of it tends to pivot up there.
Yeah.
And this is kind of the same thing that a cup and handle would do. Okay. Where it finds resistance and pivots down and forms a rounded bottom and retests that resistance and it pulls back. But in this sense, this one's pulled back too far because it's pulled back down here to that rounded bottom portion of it. So no cup and handle in this play or on this chart. But yeah, for now, it seems to be consolidating on this monthly chart between about 64 and 52. And so what I like to do then is I draw like a little rectangle just so I can visualize that. And I extend it out a little bit into the future so that just so that I can have that visual reminder. So for me, I'm like, okay, as long as it remains inside of here, I'm just sitting on my hands about this play. But I'm really wanting to see it approach either end of that box there.
Okay. So let me ask you a question. So in looking at that, that's the monthly over the course of a year. That's the chart.
This is the monthly over the course of 10 years.
Okay, 10 years. So
Yeah.
so let me ask you just off the top of my head, is that a double top on the 10-year?
You could treat it kind of like a double top.
Okay.
For me, I like my double tops to look more like an M.
Okay, I see what you're saying.
Yeah, but you can treat it like a double top for sure.
Okay.
So in that, let's say this thing were to run up back to 130, you already have the history supporting the fact that, okay, this thing tends to pivot up here.
Yes.
So, you don't necessarily, and I don't mean you as in you, but you don't necessarily have to wait until you get a breakdown below 52. You could say, okay, I'm gonna watch this thing get pumped up for whatever crazy, silly reason, and I'm gonna be waiting to short it once it gets above, 120.
Yeah, definitely.
Yeah.
Yeah, because I see a lot of resistance once it hits. It's almost pretty much the same resistance both times.
Right.
Which is interesting, even though I don't know how many times is between those two resistance points, but it's interesting, even though there's amount of time between those two resistance points, it hit it, it came right back down again. So it shows that the market, even over that length of time, still doesn't have confidence buying it at that higher price.
Yep, that's about 3 years.
You see?
Yeah.
So that's interesting.
Mm-hmm.
Okay.
All right, so gonna look at the weekly chart. Okay, so you can see where that sentiment was broken, but you can see where it pivoted at the top of that box that I drew on the monthly chart. So right now that mid 60s area is current resistance, and it looks like it might be trying to head back that way. But we'll never really know for sure. Even if you look back here beyond 2019, you can see that it tends to consolidate once it gets inside this range. Over here in this area, it consolidated for a little while. Let's see, consolidated for, this is 2019 into 2020. It consolidated for a little less than a year before it finally broke that consolidation at the mid about $66.
Okay.
And so it's possible that it may do the same thing. It may not, but we have the historical picture to support what's going on over here.
Okay.
And you and I both know that this is all behavior, and we tend to behave habitually, and that's how you get things like support and resistance and consolidation and stuff like that. So
yeah, because I wish I would have saw this on a longer time span, because now that you've drawn it out, I see it where its support is and also where its resistance is. And so I kind of see now why I turned around. Because I thought it was going to continue to keep sliding. Because if you look at where it slid down from, it was a very aggressive slide down.
Oh, yeah.
So I thought it would just keep happening. But what you see is it hit that almost a historical support and bounced back up off of it.
Yep.
Yeah, so I see that's where the buyers came in at. Okay, so now I see it now. So that's something I can automatically implement now, is to look at it on a much longer time span. And I can see it a lot more clearer. And that's something I was not doing.
Right.
Okay.
All right, so that's what we have so far on the weekly time frame. And what I'd also do is just draw a little trend line to show where the recent support is, which is about right there.
Okay.
So, short term, I could be like, okay, I'm going to watch to see if it breaches this trend line to the downside and maybe catch a short or catch a put option. A short-term put option is what I'm trying to say. Maybe down to this low 50s area, which, may or may not be worth it. I'm not sure, how this thing really moves. But that's just, how you can start to formulate a short-term plan on this one. But here's your recent sentiment here. This is your support. And as long as it respects this trend line, it's going to continue to move upward.
Okay.
Let's take a look at the daily chart. Yeah, daily chart. I mean, it's just consolidating. It's not super strong, and I imagine a lot of Chinese stocks are looking like this because of all the political stuff going on over there.
Yeah, definitely. I mean, they're really it's been, you see a lot of big sell-off earlier this year, and like I said, a lot of them consolidated, kind of trying to get their feet back, and they may just do that to the end of the year.
Yeah.
Yeah, and I think that's what's probably going to happen, because if you see the same thing, if you look at Baba, it sold off really hard also.
Oh yeah, it did. Baba was crazy.
Yeah, it was.
I tried to save one of my guys from messing with Baba, and he didn't want to listen. You know, sometimes people gotta stick their hand in the fire before they get burned, before they believe you.
I feel you.
Another thing that I'm gonna just say, you know, MACD is probably my most favorite indicator.
Okay.
And it's so much more than just bullish crossovers and bearish crossovers. Like if you really study it, it can really reveal a lot about how the market is feeling about any one ticker. Hold on, let me look at it. Check out a 2. I'm trying to make sure I'm not seeing something. Okay, no, not really. I was gonna say maybe I'm seeing a sort of descending triangle, but not so much. But yeah, so it's good to, when I'm first, especially when I'm first looking at a ticker. When I look at my daily chart, I like to look at at least a year of price action, because I want to know what's been the stock's behavior over the past year on a daily basis.
Okay.
And once I get a good sense for that, I pretty much stick to, you know, the maybe the 1 month daily chart, or the 3 or 6 or something like that. But here on the momentum indicator, which is MACD, I'm seeing some static kind of right here at the $4 to $5, or really it's a little lower than that. About the 3 to 4 or $3 to $5 area, not dollar, but point area. So for me, and for those of you that are watching, you can use this as a way to develop a plan. Only once over the past year has the momentum indicator risen above this area, just one time, and when it did, it came down hard.
Yeah.
But every other time it hit that area and it pivoted downward. You know what I'm saying? So that's something that, you know, you can pay attention to and say, okay, it's starting to approach that key area on the MACD indicator. So maybe I can consider looking at, you know, a bearish position, or just seeing what happens as it gets closer to that trend line. And just keeping in mind that we humans we behave according to our habits. And there's no difference in that when it comes to price action in the stock markets. If the markets feel like $55 on this stock is a great buy, then that's where they're going to buy it. Until they lose confidence in that price and say, oh, it's even $55 is too much money.
Yeah.
And then it's got to find a new bottom. So just keeping, you know, those things in mind as you're looking at price action. And eventually you'll get to a point where you spend most of your time looking at charts, and you just spend a little bit of time capitalizing on the moves that you were just waiting for.
Okay.
So it's really just a game of patience and getting it where you want to get it, trusting in your analysis, and having the confidence when you see those signs on your charts, or when you see signs in the markets that, okay, it's time to make my move, having the confidence to make that move. And really that's the toughest part, in my opinion.
Yeah, I feel you.
So really this one has entered what's called phase 1 of the market cycle, which is just consolidation. And it could go either way, whether it be phase 2, which is bullish, in which case it would have to beat this mid 60s area, or it could head right back on into phase 4 of the market cycle, which is bearish, in which case, in my opinion, it would need to break this low 50s area.
Okay.
That's pretty much it with this one. When it comes to swings, I usually don't go lower than maybe a 4-hour chart, just depending.
Okay.
But I typically look at the 4-hour chart if I'm looking for an entry like right now. But otherwise, I look at everything down to the daily chart.
And when you're looking at the daily chart, are you looking at okay, when you're looking at the yearly chart, are you looking at weekly or daily candles?
I do both. I do both. So I start with well, with the weekly candles, I like to go out 3 years, to be honest with you.
Okay.
But the date with the 1 year, when I'm looking in over the course of 1 year, I like to do a daily chart.
Okay, understand. Okay. So then, if you wanted to just shoot, if you could pull up, I think the ticker is FUTU. That's another Chinese company.
I think this one's crossed my radar once, but I didn't really look into it. Okay, so start with the monthly chart.
Okay.
Okay, we got some bearishness here on the momentum, but we got some reduced strength in the selling here already. Okay. So I would start here. Over the past few months, that's my sentiment. That's resistance right there. So for me, in terms of from a long-term perspective, actually I'm supposed to be looking at the yearly chart, my bad. Oh, okay, we don't really have nothing, but okay, so with us approaching the end of the year, I'm gonna take this off. One thing that I would be looking for is seeing how this candle turns out, because this, although it's currently a bullish candle, it's showing some selling strength because it popped up to 204 and the bears pushed this thing all the way down below 100, well below 100. So already I just because I train my mind this way is if this thing closes any lower than this, then for next year I would be looking for a bearish year possibly.
Okay.
And right now this candle is called a shooting star. And basically a shooting star is just an upside down hammer. And when you see those happen in the midst of like a bullish trend, tends to be a bearish reversal pattern. But you don't know until next year if you see a bearish candle for next year. So the lower that this closes, in my opinion, the better case for it being a bearish year next year.
Okay. Yeah, and they have some regulation coming up on November that could cause a lot of bearish sentiment around them.
Okay.
Yes,
and
ma'am.
so then as we get closer to the end of the year, I will be watching this about mid 40s to 50 area.
Okay.
I would say about $45 to $55. I'll be watching that area. I don't know if it's going to get that low over the next few months, but it could. Okay, let's go back to this monthly chart. All right, so this is 10 years over the course of, or monthly chart. So each candle represents 1 month, and this is over the course of 10 years or however many years this company has been publicly traded, which isn't 10 years. But, okay, so back to drawing my resistance here. Or I could do something like that, which is what I like to do. And this shows a supply zone right here. Actually, I'm gonna delete this for a second. So about right between here is a supply zone. So anytime it gets up into this area, it sells off.
Okay.
So as a trader, you could already be thinking, hey, it pushes up into here, you know, maybe I'm looking for signs that this thing's going to sell off again, or maybe we're going to get some buyers to come in this area. But for the past 1, 2, 3 months, that has been a strong area of resistance for this ticker. And then to the low side, it's finding support right here in this area. But even still, we're getting lower lows on this monthly chart.
Yeah.
So I will be watching that, and then watching to see if this bearish momentum continues to get, you know, stronger. In which case, it's possible that it could, you know, continue pushing down. And it looks like it has some support down here around 47, high 40s area. It came close to that, about 59 this month. But it could definitely still have some more downside to it. Like I said, down here inside high 40s and on down to possibly mid to high 20s, really.
Okay.
So I would draw like a little rectangle here. So for me, in thinking, in strategizing on this one, you know, I'd be considering a short down to here. Sorry, I've been trading crypto a lot, so I'll be using crypto or not using the options terms, but puts, I could be, you know, considering grabbing puts down to this area, and maybe even buying here, buying calls and riding it up, you know, to, you know, whatever resistance I've identified on my chart.
Okay.
So yeah, this one definitely has some bearish sentiment going, but it looks like it has started to weaken just a little bit.
Yeah.
A lot of times, that's the thing about MACD. A lot of times, by the time it gets to that bearish crossover, that selling strength is already weakened significantly. So you just kind of gotta train your mind to get comfortable with jumping in the opposite direction when the momentum is kind of going against you with
Okay.
how you're looking at it. So pretty much it's been trading between these two areas over the past. Okay. I'm interested in looking at the lower time frames because I'm seeing a potential pattern here. Okay, so we got I'm gonna just go out on a limb and say we got what's called a falling wedge heading toward a demand zone.
Okay.
And a falling wedge is a bullish pattern.
Okay.
But we'll see what the weekly and daily charts look like. I'm gonna extend these out a little more. A little past that demand zone. Okay. All right, so that's what I'm seeing on the monthly chart. We know our support here. We got overall context that started off with some crazy volatility. Volatility has reduced overall. And if as long as it stays in this pattern, volatility is going to continue to reduce. And then at which point we know to look for some increase in volatility, whether it be, and usually it's some sort of catalyst that causes that. And I see it has earnings on the 18th.
Yeah.
Okay. Let's take a look at the weekly chart. Yeah. Okay. Go back. Go here. activate. Go here. Okay, so we definitely got a falling wedge going on. I'm showing that this thing is gonna make a move. And I just disclaimer, I like to be neutral in my approach when it comes to looking at the chart. But it looks like it's going to make a move no later than the end of this year. And we have earnings coming, so it'll probably be well before then, maybe sometime next month, it'll make a move. And as much as I don't like to be biased, it would likely be some sort of bullish move.
Okay, so we think that it continues to move down towards that demand zone, and then once it hits that demand zone is where it's going to get bought back up.
That's possible.
Okay.
That's possible. Or it could happen before then. But let's see. Even better, risk to reward, if it gets bought up in that demand zone. I'm gonna draw the upside target in just a second.
Okay.
I think I'm gonna adjust this a little bit. Go here. So you really can say, as far as the momentum is concerned, this is my, sentiment when it starts to cross this trend line. If it starts to cross this trend line, then I'm leaning more toward a bullish position. But as long as it stays below this trend line, you ain't got no business being bullish on this one.
I feel you. Okay, I feel you. I feel you. Okay, so let's do. I don't want to hold you too long, so let's just do two more.
Okay.
So let's look at probably the second to the last one. Let's do Tesla, since everybody knows that. Yeah, okay. Let's do Tesla.
Now my Tesla chart, I don't know how it's gonna look, because Tesla used to be one that I followed on a daily basis, so you're gonna see a lot of stuff.
Okay.
All right. I'm gonna just walk through my most recent breakdown on Tesla.
Okay.
And hope that it makes some sense. So I think it failed to reach an all-time high today, didn't it?
Yeah, it definitely did.
Yeah, it did make it to 900, but it got pretty close. But as you can see, just straight bullishness on this yearly chart. I mean, this thing is just exponential move on the yearly chart. And then I'm gonna talk about some of these levels as we get to these other time frames. But that's pretty much it with the yearly chart. Not a whole lot going on. Last year's closing price is right at 705. And for me, as a person that I know you have your Power 5 and you teach your people about Power 5 or something like that. I do something similar in telling people to choose just a few tickers to study on a regular basis, and you get real intimate with how those tickers move.
Yeah.
And so in my Tesla got the boot from my watch list. I had to make some cuts because mine quickly ballooned to like 20 tickers, and I was like, I can't watch 20 tickers on a daily basis. So trim that back down, and I'm at like 4 tickers now, and that's good enough for me. Even that's a lot. Yeah. But with Tesla, just having significant levels in my mind, I knew that as Tesla was approaching those levels, when it was representing, okay, Tesla's sentiment might be shifting. And I was just going through some of my notes a little while ago and seeing that and this is something that can happen when you watch too many tickers, completely forgot that I did an analysis on Tesla over the summer because I was waiting and wanting and watching for a change in sentiment. I didn't want to chase the falling knife as it was going down because I failed to get in when it signaled to me close to the top. So I was like, okay, I'm gonna just wait to see if this thing finds a bottom and then watch for a change in sentiment. And back in early August was when Tesla started to change sentiment, and it crossed over like 650. So, imagine being like, okay, I did my analysis. once Tesla hits 650, I'm just gonna, grab a 6-month contract out to, maybe $900 strike. You know what I'm saying?
Yeah.
So the when it comes to charts, it doesn't have to be super complicated. It's as complicated as you make it. And I've just in my growing pains and learning, I used to make it super complicated. But anyway, moving on to the monthly chart on Tesla, and Tesla had some patterns that I was recognizing back then. So as you can see here with this monthly chart, we have that same symmetrical triangle that we were talking about on, I think it was YY.
Yeah.
And you got a nice breakout right here at that below 700. In 2020 close, it broke the 2020 close finally in August, and it's been running ever since. And so right now it's sitting inside an old supply zone, supply being resistance, but it's sitting strong right now.
Yeah.
And so my next target on Tesla, as far as the monthly chart is concerned, is 1160.
That's your next target is 1160
on the monthly chart. So I have some other shorter term targets, but when I'm thinking about the context of this specific chart, Tesla's going for 1160.
And so that's over the next 30 days?
No way. Probably over, I would say conservatively, probably over the next 6 to 12 months.
Okay, I see what you're saying.
Yeah.
Because my question with Tesla, and we see this on the chart, and what you call a supply zone, and I've seen that also, is that when they got close to that 900, they started getting a lot of price resistance.
Yep.
So my question is, what is going to happen in the market to where they feel like we can find new buyers for this company at this new price?
Well,
that's the question.
Yeah, they reported earnings tonight, right?
They did it yesterday.
Yes. And it looked, I just kind of skimmed through it, but it looked like earnings went pretty well for Tesla.
Yeah.
I think that we might see kind of like a little bit of stalling here at resistance, but right now this candle for the month of October is strong. I'm not sure what the volume looks like. Well, it looks like it might be a little bit below average, but right now the volume is strong on Tesla. And couple that with positive earnings result, it's possible that this thing could keep going. And I don't mean, just a straight shot to 1160.
Yeah.
But just a slow and steady kind of overall move upward toward that 1160. And of course, keeping your ears open for any news or sort of catalyst that could confirm or deny that. So we might, get some news that forces a sell-off right here at this supply zone, or we could get some sort of news that, like you said, brings in some new buyers at this higher level or higher price point. And earnings is a lot of times, depending on the company, earnings tends to be one of those catalysts that could go either way, whether it be we're going to sell here because it's too expensive, we're going to take some profits, or this is a great point to load up some more.
Yeah, and it was interesting because Tesla historically is bearish the day after their earnings, regardless of how the earnings is perceived.
Mm-hmm.
We didn't necessarily get that today.
Right.
What's going to be interesting is, can they continue with that? Are we going to consolidate, start trading sideways, or can we find new buyers at the higher price? Because one thing we know that the market's job is to create it's really a transaction machine.
Mm-hmm.
So what price point are we going to have to sell this thing at to get buyers? My only concern about, because what you said, it was 1160.
Yep.
So that's not that difficult from where they're currently trading now. It's like another $100-something.
Yep.
But to push way past that, I'm concerned like maybe some people exiting positions as we get close to the end of the year.
Mm-hmm.
Because if you got in around that 500, you pretty much already made your money out of this deal.
Yeah.
You may want to try to reposition, look for a consolidation, look for a sell-off, because I'm also worried about the 10-year as we go into the new year with the tapering, where that caused a lot of money coming out of growth.
Right.
Yeah,
right.
So that's the thing I look at. But I'm looking at this 900 because that was where they ran up to. They met a lot of hard resistance. They sold down really, really hard. So we
Mm-hmm.
see a lot of people wanted to get out at that price. They figured I've already made what I need to get. I'm out. Then they had to work their way back up. They worked back up at a short amount of time that it took for them to sell down.
Yep.
So that's positive. But the question again is, where do we think that ceiling is at? But
Right.
with this company, they got so much of a cult following. You never know how they're going to trade.
Yeah.
Yeah.
Yeah, for sure. I definitely agree with you. And that's the beauty of sitting down and looking at charts is you could be right either way. You know what I'm saying? Basically you could look and say, okay, my overall context is a bull pennant flag.
Okay.
Or a bull pennant is what I mean. And right now that's my overall context. And I know that in order to even begin to confirm a bull pennant, it's got to get over this 900 level in a strong way. So, right now, for me, the bull pennant thesis, the bullish thesis is still valid. But if we get a pivot down from here, then I know that's over.
Mm-hmm.
So then I would probably leave my targets here, but they would be less significant to me.
Okay.
And then in that case, I would be looking at some of my downside levels here because I think that it's not out of the realm of possibility that Tesla could sell off hard again down to 2020 close and even below.
Yeah.
So that's kind of how I approach those. But of course, I'll be looking at the lower range of this box first and foremost. If it does pivot from here on this monthly chart. But one thing to keep in mind, and I was just explaining this to one of my clients on the crypto side. We were looking at Ethereum, and Ethereum is coming out of a cup and handle pattern right now on its weekly chart.
Okay.
And so I was explaining to him when he was talking about, I'd like to see a pullback. And I pulled up that weekly chart because we were looking at maybe like a 4-hour chart or something like that. And I pulled up the weekly chart and I said, in actuality, Ethereum has already pulled back. We missed the pullback. Now it's time to run.
Yeah.
And I said, even this week, Ethereum could fall 200 points and that cup and handle pattern is still valid.
Okay.
So that's why it's important to always keep those higher time frames in context, because you could be looking at Tesla. I could be looking at the daily chart, and tomorrow Tesla could fall 50 points, and this bull pennant is still valid. You know what I'm saying? Simply because we're looking at this on a month-to-month basis. So the changes that you would be wanting to see on this chart are from a month-to-month basis and not a day-to-day basis. And it's easy for us to get caught up in the day-to-day and miss that overall picture of, this is what's really going on. Basically, can't see the forest through the trees or whatever the saying is. But yeah, so right now on a month-to-month basis, Tesla may be headed for, 1160. And then my second target as far as a monthly chart is concerned is 1450.
Okay, that's a little aggressive.
Yeah, it's definitely aggressive. And this target, we know how volatile Tesla can be. I mean, Tesla can easily give us 200 points in a week.
Yeah.
But I like to be a little conservative in terms of my estimates of when price targets may be hit. So I would say if in fact this is a bull pennant flag, Tesla may see 1450, maybe a year from now, at least maybe a year from now.
Okay.
Up to maybe 18 months from now.
So let me ask you a question. So when we're looking at charts and we're trying to figure out, what do we think the probability of is a certain move?
Mm-hmm.
Do we take into consideration, or do you take into consideration some of the fundamental aspects? So when I'm looking at a company like Tesla, I may be looking at institutional ownership, how big the float is, because when I'm looking at a price going up, I'm always asking myself, where are these new buyers going to come from?
Mm-hmm.
So are people going to exit out of their current position and trade places with the new people, or are they going to hold their position because one of the things I think happened to Tesla, especially when they had that smaller float before they split, is that nobody wanted to sell. So the
Right.
demand was so high on the shares, it just started. I mean, that was one of the first stocks I seen go parabolic.
Yeah.
And it was so crazy because it was a small amount of shares, around 75 million on the float. Everybody wanted to get in. And so people was willing to pay whatever it costs just to get in on the deal.
Right.
And so that's what so when you're looking at charts, are you taking that into consideration? Because when we're looking at Tesla now, we got to find either brand new buyers, or we got to get the people that currently own it to get out of their position to loosen up some spaces for the new buyers to buy at that higher price. Do we take that into consideration, or do we just go with what the chart tells us?
Yeah, for sure. For sure. The fundamental stuff is your companion.
Okay.
And the fundamental stuff is going to either support what you think is happening in the charts, or it's gonna invalidate it. And really, at the end of the day, the numbers tell the story. It's very easy for us to misinterpret the fundamental aspect.
Okay.
But the thing about price action is it tells you the nitty gritty as to this is what people really think. And
Okay.
that's why you can run into situations where, case in point, I remember, what's the Beyond Meat?
Yeah.
I remember looking at Beyond Meat, and I was subscribed to somebody's alert service, and Beyond Meat reported earnings. I got up, I looked at Beyond Meat, the chart. I was looking at the pre-market price action. They had beat earnings, they had gapped up, and the chart was signaling to me that thing was going to sell off.
Yeah.
Of course, with someone providing alerts that is fundamental based, they're going to think, oh, earnings was just crazy. We seeing all these deals and partnerships. This thing is going to keep running.
Yeah.
But then when you come to the charts and you see, okay, yeah, it's bullish. We got a bullish reaction to this news that just dropped. But on a closer inspection, the price action is telling you that it's going to sell off.
Yeah.
And I remember as soon as the markets opened, people were jumping in calls, and that thing's dropped 10 points quick, and it didn't recover. At least not, in time for people to make any money. Beyond Meat is a really volatile one, so that volatility just really zapped the premium out of their positions. So for me, price action is a source of all truth.
Okay.
And then I know how to put the pieces in terms of, whether it be some sort of material news or non-material news to that particular company. I've just learned over time how to determine what news is significant and what isn't, because news comes out every second. Really, if you use Thinkorswim, they have a live news feed, and it just prints headlines every second.
Yeah.
And I got to the point where I can look at the headlines and I can quickly filter out important pieces of news. Of course, if I'm looking, because I still miss stuff if I'm not looking. But just learning to filter out important pieces of news that can validate what I'm seeing. Another example, when those white people stormed the Capitol during Trump's tenure not too long ago.
Yeah.
I remember I was watching SPX, and the price action was showing like it started the day off bullish, and then toward the afternoon it just started tapering off, and I was hitting people up like, yo, SPX looked like something about to go down. And so I went ahead and just jumped in puts. And then all of a sudden, it was like a knee-jerk reaction in the markets where volatility came in, VIX spiked, and I had no clue what was going on. But when I looked at the news, it pretty much gave me confidence in the decision that I made. Okay. And so in that, I can quickly determine, is this news going to have like a material impact on the markets, or is this like a knee-jerk reaction? And so then that assists me psychologically with how I approach that play. If I determine, hey, this is just a knee-jerk reaction, then I need to be getting my money and going. But if it's like something that can have a material impact, then I know that I can relax a little bit and not be worried about the sudden jerking and pulling that the markets do, that the algos do, when you have those sudden catalysts that cause a crazy move in volatility in the market. So that's kind of how I approach it. I find that a lot of people, they struggle with putting the pieces together. And probably most of the people that come to me are fundamental traders. And then they find that, hey, I need more. I feel like I need to learn price action, and they struggle for a good while on price action versus fundamentals. But I tell people that they go hand in hand. You know, there is no price action versus fundamentals. The price action is a result of how people feel based on whatever news is coming down the pipe, however they feel about any given company, how they feel about, everything in regards to the markets. So one thing that I would tell people to do is don't come into it with a mindset of them being opponents. They're definitely on the same team, fundamentals and price action.
Okay. And let's look at one last one before we get you out of here. So could you type in AMC? I have some questions about that. Because I probably looked at their yearly chart, but definitely haven't looked at their 10-year.
Okay. All right, let's start with, let me check out there. All right, so as you can see, I have definitely looked at AMC in the past. All right, so getting got a golden cross here on the MACD.
Okay.
Happened right here at support, which is that historical low this year. But you can see that quite a bit of selling pressure up here, really above this $32 area. So as we close out the month, as we close out the year, I would definitely be watching for this $32 area, low 30s. But this year definitely represented a change in sentiment on this ticker. You can see I drew this trend line here that was representing the old support, and we got a strong candle here so far above that level. But I mean, it's only down at the $5 range. But so as we get as we're ramping up Q4, 32 and 48, I'll be watching those two areas. It seems like it's been spending a quite a bit of time in this range anyway.
Yeah.
And I don't follow AMC on a regular basis, but I do check in with it here and there. And every time it seems to be trading in this range here.
Yeah, that's what I wanted to ask you. I didn't mean to cut you off.
Oh no, you're fine.
Is that I'm seeing the play. I mean, we saw it hit that 70, come down, kind of try to push back up, and it's kind of stuck in between like a 30, maybe low mid 40s range. I'm just trying to figure out who's buying this stock. It seems to just be churning.
Yeah.
And it's been consolidating around that range for so long. I'm just trying to figure out how come they haven't exhausted buyers. Like, I've never seen a play where people just haven't got tired of it yet.
My thought is people are just probably holding it.
Okay.
I've had people come to me like, yo, sell everything and buy AMC, or diamond hands, I'm holding, I'm never selling. Like, there are people, it's like a cult, man.
Yeah, you're right.
People are convinced that this thing is going to go to 1,000, and for their sake, I hope it does. But for me, I'm not playing. I'm not playing around with this thing. I missed out on that initial opportunity to short it, like right before Reddit became more mainstream. I saw it. It was like people were whispering about it, and I was like, oh, let me, take a look at it. And there was some opportunity there, but I was like, oh, I'm not gonna mess with this thing. And since I missed that opportunity, I was just like, I'm not gonna mess with it now because it's just weird now.
Yeah.
But yeah, so far on the yearly chart, it's definitely showing a change in sentiment long term, but we don't know how that's going to continue into the future. Because I mean, I don't even know. I don't know what new was going on with AMC right now.
I mean, they got an earnings coming up, but the CEO has done a good job of convincing them that there's something down the road. But we know that in 2022, most likely I'll do another offering.
Okay.
So if they increase the float, it's going to, it may just start create a, what y'all think y'all call a big supply zone.
Mm-hmm.
So, but for the life of me, I can't figure out why the play has not collapsed. But you're right, it could just be the coat around it.
Mm-hmm.
And so we could just be looking at this price point just bounce between 35 and 45 for the next 2 years.
Yeah. Okay, and what I'm seeing on the monthly chart here, and I'm gonna get rid of some of these trend lines. Actually, I'm just gonna move it.
But when it gets above like 55, 60, nobody wants it at that price.
Right.
So it seems that everybody wants it cheap to try to ride it to 1,000, but nobody's willing to really buy it at a higher price.
Yep.
Yeah.
Okay, so we got another one of those symmetrical triangles happening. Okay. So we're likely going to see a move on AMC, and I mean a move as in a change in sentiment, whether it be this thing drops below this trend line or rises above this trend line before the end of the year is out.
Okay.
And of course, I would just be watching, once it moves out of this range, be watching that $48 level. And then, of course, I already mentioned that $32 level, which it's not far from that now. Yeah. But for the past 1, 2, 3, 4 months, it's definitely found some support here in this mid to high 30s area so far. That bullish momentum is starting to weaken, but it's still pretty strong overall right now. So I would just be watching for a breach at either side when it comes to this pattern.
Okay. Yeah, it's very interesting ticker. Just the way it trades, because it's very much range bound.
Yeah.
But it's been going on for so long, it's kind of weird.
Yeah. And in that, knowing that it's developed this structure over the course of several months, we know it's going to require some significant catalyst, some sort of material piece of news to cause people to change their current views on this one.
Yeah, you're right about that. You're right. And with it being a cult, I think they can be very resistant to do that.
Yeah.
Yeah, definitely.
So far, they have been. We see that in the chart right now. So you see, it's been like we mentioned, it's been pretty much stuck in this range, but not for much longer. And we got some what's called bearish divergence happening here, where you got the indicator is going in or trending in an opposite direction, being bearish in this case than the price action. So the price action. Well, actually, it is kind of trending downward when you're looking at it from a top perspective. But overall, it's just kind of trading sideways, but your momentum is clearly trending downward. So for me, like I said with the other one, as long as that momentum stays below this trend line, we may keep that same sentiment. We may not get a breakout here. But if this starts to curl up and breaches this one, then we're probably going to get a breakout up here in this area.
Okay.
At which point, once it breaks here, I have about 57 as a target, 57 on up to low to mid 60s first.
Okay.
And I don't think I've gone beyond that really.
So you don't have it shooting up to like 10,000?
No.
I feel you. I mean,
I could not justify that.
Yeah, I'm trying to figure out where they're gonna find those buyers at, but they claim that somebody's gonna have to buy it at that price. I say, okay.
Yeah, what a lot of people are talking about is the fact that they're doing all these offerings and there's so many shares short.
Yeah.
And I haven't looked at what the short squeeze info is on this, and how high that short interest is right now. And they think that it's gonna really cause some problems that's gonna impact the entire market.
Okay.
Because if this short squeeze happens, then we already know what happens with the short squeeze, but that's the rationale that I've been given as to why these astronomical numbers, as far as where the share price is going. Still, I can't justify it looking at a chart. I don't like to just throw numbers out the side of my neck. I like to just go with what the chart is saying, and then I readjust as it hits my targets. But if people have done their due diligence and they see that the short interest is 50% or something crazy like that, then maybe so. We've seen short squeezes on other stocks that have just really done numbers in a short period of time. But anything can happen. But I just don't see 1,000 for this one. Not right now.
Okay. Well, I appreciate you coming through, and I want to ask you and kind of give some information to the audience. So if I'm a trader, I want to learn how to navigate price action a lot better. And because I want the results of, better entries, better exits, being able to time my exits a lot better, better risk and reward, and to put myself in the ability to make more money, to have the potential to make more money, how can I reach out to you or find you, via your social media or maybe your website?
You can reach out to me on social media. My Instagram is at BHCapENT LLC. Okay. Same thing on Twitter. On Facebook is BH Capital Enterprises. You can find me there. If you're connected to me on my personal page, which is public, Delancia Blanchard Hamilton, you can find me there. And Dave, I'll send you my link to my course, and you can post it if you want with the video. And they can get information about the course that way as well.
Okay, that'll work. All right, so I appreciate you coming through. Was there anything you wanted to close on, or we're gonna just wrap it?
Just don't be discouraged. Keep at it. Study the charts. It's not very difficult. You don't need a bunch of indicators. The one thing that you absolutely need when it comes to reading a chart is trend lines. Okay. That's the only thing that is, in my opinion, a must-have when it comes to learning to read a chart. So that's pretty much it.
Okay, I appreciate it. So let me stop the